Today, I'm honored to co-host together with ISACA Warsaw our common webinar of ACFE Baltics and ISACA Warsaw on the topic of understanding the nature of fraud, global fraud risk landscape, and the recent trends. So maybe let me say a couple of words briefly about myself, about ACFE, and then we go to the main topic of our webinar. As was already mentioned, I have a number of international certificates, and first of all, certified fraud examiner, as I'm the president of ACFE Baltics, and basically working a number of years in global international companies as chief risk officer, head of controls, head of audit, and developing the chapters of global institutes in the CE region. Talking about ACFE, that's the largest global anti-fraud professional organization, which was founded back in 1988, has around 95,000 members worldwide, and 250 local chapters headquartered in the USA, and is the premier provider of the anti-fraud training worldwide. We issue certified fraud examiner certificate, and also biennial report to the nations, which is the world's best report on the global fraud risk landscape and the anti-fraud mechanisms. We have also very strong ties and connections with ISACA. You can see some examples of the cooperation on the chapter and on the global level, and I think we are now in a good shape to also have this good cooperation in our CE region level between ISACA and ACFE with this event, and hopefully with the next events going forward. In a nutshell, I will start with basically the cost of fraud. To put it in the other words, how much does it cost not to react? Because typically that's the question that we have when we come with any anti-fraud programs to our board. They might say, why do we need to do it? And this is a good answer. So I will provide you some arguments why it makes sense to invest in anti-fraud programs, and how does it correlate with the cost of not reacting. I would be happy to explain how does fraud happen. So what is the mechanism of the fraud? What does it consist of? Describe the portrait of a typical fraudster. So who is that? Is that the insider? Is that the person inside our company? Is that the newcomer? Is the person who works a number of years, so that we could understand basically who is this person. I would refer to the nature of fraud, the types and the most common fraud schemes. And of course, I will finish with the question, the answer to the question, how we can stop it. At the end, we would have a Q&A session. So let me maybe share first the information that I have in the slides, and then I will be happy to answer your questions. So please feel free to ask them during the Q&A. Okay, with that, let me start. So here I'm referring to the report to the nations. That's the global report with around 2,000 companies taking place from all over the world, so 138 countries. And based on the replies from those companies, we can summarize that overall organizations globally might lose up to 5% of the revenue every year due to fraud. That means that we might know or not know that something is happening in our organization, but since this is the typical amount that the companies who actually got the fraud detected, so these are the losses that they have, we could correlate that, we could extrapolate it to the other organizations that might have not yet detected the fraud. So basically, we could see that this is quite material, and the total proven losses in 2024, so this is the date when this last global report was issued, amounted 3.1 billion USD globally. And around 22% of the organizations with fraud detected had actually losses above 1 million USD. So we could see that this is quite material topic, and this is widespread all over the globe. Okay, so let's have a look at the duration. So on the right side, you can see the split of the duration. So how long the fraud scheme was lasting before it was detected, and then what were the losses. So is there any correlation between the duration and the amount of the actual loss? We can see the correlation that the longer fraud lasted, typically the higher was the median loss. We see like a significant jump after 24 months. So if the fraud lasted more than 2 years, typically the impact was triple as high. So from around 100,000 USD, the losses jumped to 300,000 USD for the fraud that lasted above 2 years, but less than 3. And then 3 onwards, it was already 700,000 USD as the median loss. With that, we can see that it makes sense to detect fraud rather sooner than later, because if we do not invest in proper fraud detection, the losses would be growing substantially. Let's have a look at the global heat map. So we already understood that fraud is material on the global scale, but let's have a look, are there any regional differences? So for that, I would refer to 2 reports. This one is the Transparency International Corruption Perception Index. That's the best report available publicly, which colors every country with certain color and with certain number of points. This report refers specifically to corruption, but I would say it correlates with the other fraud risk as well, because corruption is only one type of fraud. Financial statements fraud and assets misappropriation would be the other 2. So we will see the correlation further. And regarding the heat map, I would summarize it as follows. We can see that the corruption risks are relatively low in Western Europe, in Northern America, and in Australia. So you can see the colors are, let's say, more yellowish, while rather high in Africa, Latin America, Central Asia, and Eastern Europe. So there the colors are more reddish. So the darker the color, the higher are the corruption risk in that region. And regarding the points that you can see on the left side, the bigger the score, the better it is. So if we have a high score, that means the country has good enough mechanisms to prevent corruption risk. And if the score is lower, then the risk is higher and the country doesn't have well-developed anti-corruption systems. So with that, we can see that in terms of trends in our region, in Central Europe, short term, year to year, the changes are not big. So typically 1 up to 3 points, which is like 2 to 5% year to year change. So we could see that it's rather stable. But if we look at the long term, we can see that there are some concerning trends. For example, in Poland and Germany, with corruption risk on the rise, we can see the steady decrease of the corruption perception points from 2015 till 2024. While some more stable and positive trends in the Baltics region, for example, you can see Lithuania on the left downside of the screen. We can see like +2 points this year, and overall the trend is rather rising. So to put it in a nutshell, we can see that the topic of the corruption and fraud risk is also a concerning trend for our region. Thus, it makes sense to pay attention to it. Let's have a look also on the report to the nations. So here we can see a regional correlation. So it's not a country by country, but it's more region. So ECFE data is basically showing the similar overall trend compared to the Transparency International data. We can see that there is a correlation between the overall fraud risk impact and the corruption ones. This proves the broken window theory, that basically the small crimes, the visible signs of crime, some non-compliance, they actually target a bigger problems if they're not fixed. So this is the study that was made by the US criminologist George Kelling and also James Wilson. So they basically studied if there are some, let's say, minor problems and they're not fixed, on the longer run, will people start to create bigger problems? So actually, this shows that basically the regions where we already have some bigger problems with fraud, typically it becomes worse if they're not fixed. And going more to this graph that you can see on the left side, we can see that if we see the losses per regions, the losses are higher, for example, in Eastern Europe, in the Central Asia, in the Latin America, so same regions where we saw reddish colors on the Transparency International reports. And for example, Western Europe or Northern America, the losses are lower. That also shows the correlation. The only exception I would say is the Sub-Saharan Africa, but here I would say that there are much less cases reported, so the data is like less data is available. So I'm not sure if that is representative. Apart from that, a big number of cases analyzed for each and other region, and overall the results correlate between the ACFE and the Transparency International reports. Okay, so let's then have a look at the trends on the longer run. So this is the analysis of the decade, so 10 years, and then how is the fraud topic evolving? Are the losses becoming lower or higher? So are the companies managing their fraud risks in a better way, or maybe not as good as they used to in the previous years? Well, overall, the trend is positive through the last decade. We consider the median duration of the fraud has decreased from 18 to 12 months, and the median losses have also decreased by around 16%. So overall, we can see that with raising awareness about the fraud, companies are actually dealing with that better now than 10 years before. This also correlates with improved implementation of anti-fraud controls by 11 to 16%, and education and knowledge sharing, which is the key to continue this trend. So basically what we're doing today is basically building this awareness, and this is the first point to actually prevent the fraud in a more effective manner. Going forward, well, at the same time as we as anti-fraud professionals are sharing knowledge and building our skills, well, the fraudsters are actually becoming more creative and powerful at the same time. So this is like an ongoing fight where both sides are actually developing. So while we are finding the new ways how to prevent or detect fraud, the fraudsters are now finding more creative ways how to conduct fraud, maybe in the IT environment, maybe using the cryptocurrency, and who knows, maybe even with artificial intelligence. So that's why cooperation between ACFE and ISACA here is crucial. Well, going into details of the graphs presented here, we could see that more fraud perpetrators are having now higher level of authority. So if we see this trend between 2012 and 22, we have now 62% of fraudsters who have the manager or executive position compared to 56% 10 years ago. And that, of course, makes it harder to counter them, and basically some standard controls like the 4S principle might become less helpful, as the people with the high authority might potentially override these controls. And of course, new challenges require new solutions, constant learning and development. Going further, let's have a look at the right side of the screen where we can see the collaboration. So we can see that fraudsters are now collaborating more. While 10 years ago or like 12 years ago, we see 58% of fraud were conducted with one perpetrator only, which means like one person found some gap in maybe internal controls and used that gap to get a benefit. And now it's only 42%, but now it's more people who basically do the fraud together. So you can see 2 or more perpetrators. Now it's 58%, whilst it was 42 in 2012. So more or less fraudsters become more collaborative. So they probably understand that as basically the organizations are implementing, for example, forest principle controls, the fraudsters are now collaborating to overdo that, to override the controls, which is, of course, the alarming trend. And this probably shows that we need to also enhance the controls and maybe, apart from the standard ones, add on some additional ones like data analytics controls and so on. Okay, so we've reviewed the theory. Let's now have a look at the real life cases, because this is actually what speaks the loudest. It speaks for itself. I've put here some examples of the well-known companies like Netflix, SAP, Revolut, and so on, where you can see some real fraud cases in the recent years, which were quite material. We can see that the fines or the losses were quite high, like 100 million in case of SAP for basically not following the FCPA legislation, or, for example, going closer to our region. It's quite recent case from actually this year, April 2025, where basically Revolut Bank, you might probably know, it's a neobank that was fined with the largest fine in the history of Lithuania. So 3.5 million euro fine that was put by the National Bank of Lithuania to Revolut for basically not having proper controls in the field of anti-money laundering. So what is interesting here, it's so the fine is not for actually some fraud that happened, but it's regarding the failures of the necessary internal controls that need to prevent it. So basically an important point that we need to proactively implement internal controls, especially in the regulated areas such as financial services industry or for the listed companies, because you can see that the companies might also be fined for not being proactive, for not implementing the necessary control measures. And to cut a long story short, simple message to the owners, executives, and the board. So why do we need to have anti-fraud controls in our organization? Well, basically because we need it not to appear in the news and scandals and bankruptcy section in the news. I do believe that no owner, no board would like to be the next one in this section on the press. So that's why we need to secure our organization with implementing these controls proactively. Okay, so let's move on. So we already understood this fraud is a big thing. This is material. And now the next question is probably, how does fraud actually happen? So let's have a look at that in more details. Well, here I would like to refer to the fraud triangle. You might probably have heard about it because this is, let's say, the most widespread concept or model in the anti-fraud world. So to put it in a very simple words, we basically need to have all the 3 elements of the triangle combined for the fraud to happen. Now let's go one by one. So let's start with the opportunity. So opportunity actually refers to the access to certain assets or financials, which is combined with the lack or loose controls, which allow a fraudster to commit a fraud and stay undetected. So in simple words, that certain gap in controls, maybe there are no controls there, or maybe there is a gap in the controls, which allows the fraudster to gain access, for example, to cash, to certain assets, or to basically do the changes in the financial statements of the company, for example. So there could be different reasons why people commit fraud, but the fact is, if there is no opportunity, fraud will not happen. Okay, let's move further. So next part of the fraud triangle is the pressure or the motivation. So this one lays in the psychological area. same as the next one. So pressure is actually financial or emotional force that pushes the person or motivates the person towards fraud. So for example, if the person sees the opportunity to get some cash from the company money and stay undetected, well, in order to have the motivation, other person wants to, for example, gain this cash for his or her personal gain, to improve, for example, the life level, or maybe there is some pressure that the person has, like some debts or something, that actually pushes the forward to pushes this person to create such possibility to override the controls and commit a fraud. But fraud will not happen if the third part, the rationalization, will not be in place. What is rationalization? Well, that's basically some personal justification of dishonest action. So that's the ability of the fraudster to explain to him or herself that what they're doing is, for example, restoring justice, or it's the necessary evil. So if the person cannot explain to him or herself that what they're doing is actually maybe not so bad, well, it would be, the fraud will not happen, right? So 3 elements need to be combined, all of them, for the fraud to take place. And what's important is that 2 out of 3 are in psychological area rather than the logical area. So that's important that we actually build our anti-fraud system, that we tackle all 3 of them. This is important, and I will come back to that in the last section of my presentation, when we'll be talking about how to prevent fraud, how to stop it. Okay, I would like to build on the idea to explain how does fraud risk differ from the typical operational or financial risks. Well, the first question I would like to ask is it intentional or not? So is it a fraud, is it a mistake, or it's an error? Here there is a significant difference, because in case of the operational or financial risks, this happened because people made a mistake or the error. So the mistake is made by people who already have the knowledge, but they lack concern or attention. So for example, the person was tired and posted a wrong transaction. And the errors are made because of the lack of proper knowledge or training. So for example, the person who was not trained for the job actually was put on this position for whatever reason, for lack of trained person, or just to substitute somebody for an interim period. So in this case, the person could make the error because he or she doesn't have enough knowledge, and also does it unwillingly, but it happened. And basically what's important to understand, that if we put just a formal check, so just somebody knowledgeable will pay attention and double check, this is good enough to identify the mistake or the error, because the person who conducted it doesn't have any willingness to hide, to conceal it. So that's why such controls as, for example, the independent review, the automated or systematic controls to limit mistakes, for example, so if we limit the ability to put some data, like for the percentage fields, we could limit it from 0 to 100, that could already help. Or if we do the periodic reconciliation, as in finance, we do the general ledger to sub-ledger monthly reconciliations. So high level, that's a check between the accounts. This will be already enough to identify the operational financial risk. But will it be enough to find fraud? So let's first have a look at the definition. So what is actually the fraud? So fraud is actually an intentional act or omission of illegal nature, which is designed to deceive others, resulting in the victim suffering a loss or the perpetrator achieving a gain. So here we can see 2 main differences. So first of all, this is intentional act, which means that the person who committed fraud knew what he or she was doing. And the second part is the illegal nature. So doing the fraud, this is illegal, while mistake or error doesn't have this illegal nature. So what do people who conduct fraud typically do differently? Well, they typically conceal, so they hide the evidence of their wrongdoing. That's why detecting fraud is much harder, because you cannot just pay attention to something, double check and identify it. You actually should be able to see what was hidden, what was concealed, like for example, the evidence the primary documents could be altered, so could be changed. So you need to know where to look to be able to see that it was changed. So for example, you could check the changelog in the system to see that somebody has deleted a transaction or has modified the transaction, that actually there was no valid reason for this modification. But for that, you need to, of course, know how to check and where to check. So this is more or less like a game, and to be able to foresee or overplay the fraudster, I advise you to actually have a look at some nice anti-fraud movies. Like, for example, there is a Catch Me If You Can movie with Tom Hanks, who's playing the FBI agent, and Leonardo DiCaprio, who's playing a fraudster who was altering the payment methods, so like checks, and how Leonardo is trying to find new methods how to create these fake checks, and then the Tom Hanks is actually finding new ways how to identify the true checks from the altered ones. So this is one of the examples. You can have also the Informant movie with Matt Damon. So there are quite a number of those, and I do advise you to watch them. It's fun, and you are learning something for your professional benefit. But going closer to, let's say, examples of fraudulent activities. So there could be, for example, assets misappropriation, financial information misstatements, so other corruption or other illegal acts. And for us to know where to look, we need to understand what fraud schemes actually exist. And for that, we need some specific knowledge about the fraud schemes, and maybe some fraud schemes which are more specific for the industry where our company operates. And this is exactly what we'll be looking at in the next slides. Before that, a couple of words about the concealment methods. So how fraudsters typically change or hide the evidence. Well, typically, the perpetrator covers the tracks using various concealment methods, like creating of the fake documentation, and we can see the top 5 concealment methods on our right down side of the slide, which starts with 39% creating of the fraudulent physical documents, 32% altering these physical documents, 28% creating fraudulent electronic documents. So there was no actually document, and it was created to hide, for example, stealing of the money. So like an invoice was created as if it was a real invoice that was paid. 25% stands for altering of the electronic documents or files, and then 23% for destroying or withholding physical documents. So you might ask a question why it doesn't add up to have 100. Well, because typically there is a combination. It's not like just, for example, altering the physical document. So you might alter a physical document and create a fraudulent electronic document instead. And then here on the top side of the slide, you can see that 48% of executive level perpetrators have destroyed the evidence, and 61% also created some fraudulent evidence. And of course, in order to find that, to detect that, well, checking primary documents and the change logs in the ERP systems is of crucial importance during the audits. Okay, so I've shared some information how does fraud actually happen, but who commits the fraud? So where we should be looking at to find fraud? What is the portrait of the typical fraudster? Well, around 1/4 of fraud cases is conducted by the executives, but those trigger by far the more material losses compared to those caused by the line employees. So this is probably a surprise, because typically we think that we might think that people at the lower levels of authority are those that might commit some fraud. Well, maybe they commit it more often, but the impact of that is much lower. So while when the people with a high authority commit fraud, you can see on the slide that the impact is much higher. So we can see that, for example, the owners or executives, if they commit fraud, it's typically around 337K USD, the medium loss. If the manager does it, it's almost 2 times lower with 125K. And if the employee does it, it's around 50K per case. So you can see that the higher the people are positioned in the organization, the higher the impact of the fraudulent activities are for the company. Let's have a look at the departments. Well, we can see that nearly half of the occupational fraud cases are coming from operations, where procurement is also included, accounting, and sales teams. So basically, these are the teams where we have most of the fraud cases. And we can see also that the vast majority of perpetrators, so around 94%, have not made fraud before. So these are people who are working in the company, and out of the sudden, one day, for some reason, they conduct the fraud for the first time in their life. So which shows that this is quite hard to be detected, because even the background checks will not help in this situation. And typically fraud cases lasted around 1 year before being detected, and the vast majority of fraudsters displayed one or more behavioral red flags. So basically, fraud lasted for quite a while, and if we knew where to look, we could see some red flags that something is going wrong. And what are those red flags? We will see in the next section. Okay, some more data, some more basically analysis. We already discussed about the positions, so let's now maybe move to the age. So we can see that the persons of 45 plus years have stolen almost 3 times more from the organization, with a median loss of USD 250K compared to those who were below 45 years old, with a median loss of around USD 90K. So basically, this correlates with the level of authority in the organization, because as we can see, the higher the person is in the organization, typically the bigger is the impact, the bigger is the loss of the fraud, and which correlates with the age, because typically the position inside the company and the age correlates. In terms of gender, so as at 2022, around 70% of fraud cases were committed by men, which cost around 180K USD compared to around 100K by women. But the trend is that more and more fraud is committed by women. So for the moment, there is a gap, there is a difference, but the trend is that women are also, let's say, catching up in terms of committing fraud. Okay, so the nature of fraud. So types and typical fraud schemes. Let's have a look in more details. What does it actually look like? I would pay attention to the fraud tree, and you can have the full tree with all the boxes explained in the ACFE report on the nations on occupational fraud and abuse. So this is a publicly available report. You can download it. Where each box, each type of fraud, so each scheme will be explained. But let's stay on the top level. So we can see the 3 main big, let's say, parts of this fraud tree. First one is the corruption. The second one is the assets misappropriation. And the third one is the financial statements fraud. So basically, here, what I would like to share is that asset misappropriation is the most widespread type of fraud. As you can see, there are many ways, so people were creative throughout the history. There are many different ways how you could misappropriate the assets. So to put it in a very simple words, steal something. There are some cash and non-cash ways of misappropriation, and because basically this is probably the oldest types of fraud, there are much more methods and schemes how to do that. But in terms of materiality, financial statements fraud stands out. So it's 9 times more often that the assets misappropriation happens, but the financial statements fraud has 6 times higher median loss per case. So basically it happens more rarely, but this is much more material. And it's important to understand the specifics of various fraud categories, as mechanisms of mitigation would also differ. So, for example, if we have the more physical security controls, this would work well for the assets-related fraud only. But if we want to, for example, prevent financial statements fraud, here we go into certain data analysis in the reconciliations for financial statements related fraud, like as I mentioned before, for example, general ledger to subledger reconciliations of the accounting accounts. And if there are some differences, then we need to have a look in more details. Also, a good example would be, for example, checking of the postings in the closed periods, because typically we do not do that, or if there is a valid reason, they need to be a proper approvals. Because typically what happens is that fraudsters know that, for example, if the auditor has already audited that period, then they will not be paying much attention to it. So typically what fraudsters do is that they reopen the closed periods and book some transactions in the already closed periods, so in the previous periods that were already audited, because, for example, less attention will be paid there. And then they reconcile the actual, for example, fraudulent activity with this month. So they basically match it with the difference from the previous year. So they change the opening, the closing periods, amounts, and basically they map the transaction that they do now towards the difference that they create in the previous periods. So that's why this is something to pay attention during, for example, internal and external audits. Okay, let's have a look at the industries. So on the slide on the right side, you can see the list of industries. And on the top side, you can see the fraud schemes, different fraud schemes. And then on the intersection of both, you can see different colors and the percentage. So basically, the darker the color is, the more frequently this specific scheme is happening for this industry. We can probably imagine that in our companies, we have some limited resources for conducting anti-fraud activities. And that's why we need to dedicate these resources properly to the more risky areas and more typical fraud schemes for our industry. So let's take an example. So if we're working, for example, in a more asset-heavy industry, like a production company, where we have a big production plant with a lot of, for example, work in progress, with a lot of inventory, with a lot of fixed assets. So typical fraud schemes that we can see in these cases would be more assets misappropriation. So somebody physically steals some finished good or maybe some inventory from the production facility. But if we're talking about a labor-intense company, like a legal firm, for example, a law firm, then we might expect rather financial statements fraud or maybe some payroll fraud, that, for example, there is a ghost employee created in the payroll list. If it's a big company, for example, when I used to work in Big Four, we had like hundreds or sometimes even more than 1,000 employees. So we didn't know, we didn't meet all the people. And then basically on the payroll list, somebody, for example, HR person created a ghost employee. And for example, if this employee is in the payroll files created as if this person is on the maternity leave, it will be very hard to identify that this is a ghost employee. So there needs to be a specific controls that the list of the employees in our payroll database is reconciled with actual paper form, for example, labor contracts, so that we can see that there is an actual document to support this person who is created in our HR database. So these are just some of the examples. You can see more in the report to the nation. And I do advise you to have a closer look at that and to basically dedicate your resources and prioritize your efforts towards more risky schemes for your industry. Okay, and now probably the golden question of the whole presentation is basically, how can we stop it? Because that's not enough to know what kind of fraud actually happening, what kind of fraud schemes might exist. We need to understand what we can do to stop it in our companies, or to prevent it from happening. Let's start from the detection part. Well, we know that around 85% of fraudsters displayed at least one behavioral red flag throughout the period, which is typically around 12 months that the fraud was taking place in the company before it was detected. Now let's have a look at what are these red flags, so what we should be looking for. Here I've put some slides from Report to the Nation with, let's say, high-level ones. On the next slide, I will show you more detailed red flags. So on the high level, this is, for example, living beyond the means, which is 39% of all the red flags. Financial difficulties, which is 25%. Unusually close association with the vendors and customers. So, for example, for that, typically people in the procurement team or in the sales team, they might be rotated. That, for example, every 2 years or every 3 years, they start to serve a different group of clients, or they start to work with a different group of vendors. This helps not to build too close ties with the vendor customer, because it might actually result in certain deals between our employee and the representative of the vendor of the customer. 13% are the control issues or unwillingness to share duties. So if we see that somebody is not delegating, not sharing duties, and also not going to vacations, just concentrating all the approvals, all the information with his or herself, that's also basically a sign to go into details and check in more details. Because like the red flags does not already say that something is wrong. It just shows that there is a high probability that something is not very, let's say, clean. But it doesn't mean absolutely that fraud is taking place. It's basically showing that we need to have a look in more details. On the right side, you can see some specific red flags for the C-suite, so for the top management, where we can see that bullying or intimidation is the top one. And then the control issues and too close relations with their attitude is the too close relations, being the top 3. So a little bit different red flags for the top management compared with the general red flags. Okay, let's have a look also to the difference of the red flags between male and women. So if we have the male fraudster, then typically that's too close relations with the vendor customer, or bullying, intimidation. For women, this is more living beyond the means, financial difficulties, and so on. And basically, in public sector, typically, basically the ownership of the assets of the public officials is publicly available. So for the public officials, it's possible to see that if the person has, for example, this level of income and, for example, one car in ownership. So why is this person coming with a totally different car, with a very luxurious car and very luxurious outfit? So, okay, it's not already showing that the person is a fraudster, but it might motivate, for example, the public anti-fraud office or the media to have a deeper look. So again, these are basically the high-level indicators. Only the court can say if somebody is guilty or not, but this is an indicator to have a deeper look. Okay, now more specific red flags per the fraud type. So you remember the fraud tree, and now let's go basically type by type. So for the financial statements fraud, I would specifically pay the attention for the absence of primary documents to support the booking of the transactions. So modern ERP systems typically have also the limitations that you cannot book a transaction without attaching of the primary document. But then, of course, we need to check maybe on a random basis, of course, not all, because that would be too much, but on a random basis to check if the document attached is actually the one to support the transaction, or maybe, I don't know, there's just, I don't know, a picture of the cat which is attached and it's not the primary document. So we need to have a look there. Access to modify the files. So I do believe that as IT professionals, you understand very well the concept of segregation of duties. So first, of course, we need to have the proper roles that only the people with necessary access have the ability to change or modify certain transactions, especially with the higher monetary value, but also based on the nature. So for example, if the person is putting in the master data, like creating the vendor, the person should not have access to create a transaction with this vendor. So the person who books invoices is a different person to the person who creates vendors. So to segregate this on the access levels. If we're going to the asset misappropriation, we can say that probably the most alarming one is if we determine the raw materials consumption by the reverse count. So basically, if we consume some amount, so we do not have the system that actually calculates and puts in the system what we consume, but at the end of the month, they just check what is there at the end of the month and check what was in the beginning, and everything in between they just put on the consumption. So this is a very bad method, because then we don't know if it was actually consumed or maybe this raw material was stolen. So that's why if this method is used, this is already a big red flag. Also some absence of the warehouse system, or if there's a huge disorder with the goods, materials and so on, or absence of the electronic files, so that we do not have the system to support the raw materials or the inventory. This is also an alarming situation. For the general, like overall red flags, we can see that if somebody is, for example, overreacting and is very aggressive, if there is an auditor coming and asking to provide some documents, to provide some evidence, if the person is aggressive, doesn't want to cooperate, this is already a big red flag. If also there is an over concentration of power in one hand, so if somebody is approving all the transactions, this is also not a good sign. Also, I had discussions if the owner is actively involved in management, is it good or bad in terms of fraud? Well, actually, I would say that it's much better to have a good governance system, that there is a good balance between, for example, the owner being involved in the business and also the counterbalancing power of the supervisory board. Because what I saw typically, if that the power is over concentrated on the owner, he or she might, for example, adjust the financial statements to have a better results before the sale of the company or before gaining a big loan from the bank. So to balance it, we need to have the proper corporate governance and well-balanced force in the company. To put it in a summary, the suggested approach is we have the group-wide risk screening, and if we see the red flags, then we deep dive in these specific places, maybe involving a certified fraud examiner, a specific person who knows how to deal with fraud, because actually we need to get all the proper chain of custody. We need to collect the data in the anti-fraud examination to think that it will be also provided to the court later on. So that's why specific knowledge and skills are necessary. Okay, to finish with the detection, I would say just 2 words about the whistleblowing. This is the most frequently used and the most effective mechanism of fraud detection. So 42% of all the fraud cases were detected by tips. And we can see that email and web-based forms were 75% of cases reported. So basically, most of the cases were detected via the electronic methods. And basically, we can see that now the whistleblowing directive is actually also implemented in Poland. So basically now it's also mandatory for the companies above 50 people. Okay, prevention. So of course it's better to prevent than detect fraud. So what we can do to learn from the mistakes of others who already detected fraud and basically act proactively to prevent the fraud in our companies. Well, we can see that nearly half of the fraud cases happen due to lack or the ineffective implementation of the controls. And 81% of the organizations implemented or modified their internal controls as lessons learned after the fraud occurred. So which says that basically the best thing we can do in our company to prevent fraud is to implement proper internal control mechanisms. And what are those internal control mechanisms? So top 5 are as follows. Again, they do not add up to 100 because most of the controls, they actually fall into the more than one category. Management review, so it means like a 4S principle, or at the end of the month we have the person who doesn't have access to book transaction that reviews the list of transactions, sees if there are some strange or unusual, and then checks the evidence for that transaction. Proactive data monitoring. So again, with for example, good modern systems, or even with using of the artificial intelligence, we could put certain criteria and ask the system to monitor the list of transactions on the ongoing basis. So for example, if we do not expect people to go on the business trips during the weekend, so if we see that there are some expenses during the weekends, we could ask the system to list these transactions, and somebody would have a look if there is also some business purpose behind that, or maybe not. This is just the example. We could put different criteria. So what transactions will be pulled from the overall list, and then we could have a look at those transactions in more details. Surprise audits, I think this is quite obvious, because if we know that fraudsters actually conceal the evidence, if we come in the moment where they do not expect, so it's not the yearly audit, but this is the surprise audit, they will not have time maybe to prepare all the documents to cover their fraudulent activities. I'm not saying that we need to do surprise audits all the time, but I'm saying that we need to have some portion of our audits which would be of the surprise nature. And of course, for the internal controls to be effective, we need to think about the cost versus benefits, and a good balance between the preventive and detective controls, the automated and the manual semi-automated controls. Since we're out of time, I will not stop here, but this is also an important way how to balance it properly, not to overdo, but to provide a good balanced approach in a cost and benefit effective manner. And the last but not the least is basically thinking about also some soft controls in place, because as we saw in the fraud triangle, 2 out of the 3 factors were in the psychological area. Thus, we need to trigger that via the ethics, via development of the soft skills. And I listed a number of projects that were working well in the companies where I used to work, like the Coffee with the CEO project, where we had basically CEO once a month talking with some people who applied from different departments, and they could reach the CEO directly, and that built trust. And then the people actually, if they saw something wrong, they reported it more openly through the whistleblowing mechanism, because they saw that the top management is reachable. These are people who are also caring about our opinion, so that's why we're happy to share this opinion. For example, Culture Champions community, that was like in every, for example, country, and also in every function, there was a person who was like a culture champion, who was up to date with all the changes in the ethics and the compliance policies, and this was the go-to person if we're not sure if we can or cannot do something. So DIA policy, diversity, equity, inclusion, also there are a lot about that in the media, but from my perspective, the most important part is how we implement that, because if it's not done properly, they might harm the organization. But if it's done in a good manner, that we actually make people heard, and we involve people with different experiences, and it's not only about the gender or the age, it's about also having a combination of people who work for our company for many years, and some people who work for different companies, people who work, for example, for the consulting companies, and now they work for the business. So this diverse combination of experience that might benefit the company on the long run. So to finalize, I would like to say that culture is strategy for breakfast. You might have heard this phrase, but actually this is also an important one to build the ethical workplaces and prevent fraud. So with that, I think I've gave you some summary. Of course, this is not an exhaustive information. But I'm happy to stay connected with you. I've put here the LinkedIn names of the pages and the websites of both ACFE and ISACA. And I hope that we will be developing this cooperation going forward and sharing our knowledge in the next events going forward. Yes, thanks a lot for inviting, and yeah, happy to cooperate going forward. So thanks a lot, Mariusz, thanks a lot, Michał, and pass my greetings to Jan. So let's stay in touch.
Okay, thank you very much.